All right, everybody, it is me, Gregory Mannarino. It is Friday, March 25th, 2022, and it's already starting. What am I talking about? Okay. I'm laughing, people, but it's just really not funny. A couple of things before I get to the market. Number one, you and I have been sitting back here, enjoying each other's company. And at the same time, I've been explaining to you, and you know this to be true, that the narrative with regard to food shortages is getting louder. Well, right out of the mouth of our illustrious, are you ready for the word? Hold your ears for those of you that are sensitive, retard president. He's retarded. I'm sorry to tell you that, but the man literally is retarded. Anyway, so President Retard is saying here that food shortages are going to be real. Duh. Honestly, you can't make there's no way to do it. There's no way to make something like that up, but that's a fact here. Now, here's something else that you can't make up. We already understand that the Federal Reserve is desperate to not be aggressive raising rates moving forward. Well, what did they do? Well, they floated out Lex Luthor himself, the other illustrious freak of the, and I mean freak, of the Federal Reserve here. I'm talking about Neil Kashkari. And he's contradicting pretty much everyone on the other side, all his other, fellow freaks at the Federal Reserve. Oh, yeah, you know what? Maybe we're not going to be so aggressive with rate hikes moving forward. Well, we heard from the Fed yet again. And this is what they're saying, and I dare you to make this up, okay? For how many years have we heard that what the Federal Reserve does with regard to monetary policy is data dependent? Data dependent. That's all we hear about. Well, that's what they're saying. Further rate hikes will be data dependent. Well, let's see. We have inflation now, over 8%, their numbers, okay? They had a target inflation rate of 2%, but they're data dependent. How did that happen? Again, they don't give a damn about the data. They don't give a damn about you, me, or anything else. All they're going to do is continue to inflate. People, look, you got to be brain dead. And I mean this, to not understand what's going on. Without the benchmark interest rate being above the current rate of inflation, all that's going to happen is inflation is going to surge higher. Duh! And the Fed is nowhere near that. I mean, these incremental raises in the federal funds rate, all that's assuring is that inflation will continue to skyrocket. I'm still waiting for a single member of Congress, even one, to just raise this question to, the Federal Reserve, call them to account. What happened? They're in on it. All of them. You have to understand. Like I've told you since I don't know how long now, you, my dear friends, lions, lionesses, all of you, we got nothing. We have not a single representative that cares about us anymore. They're all engaged in this corporate agenda, takeover by central banks around the world. We the people are dog shit, and they continue to feed us buckets full of crap. And that's what they're doing. You know that. Anyway, on the economic front, again, before we get to the market, make this up too. All right, we already understand, you and me, that debts and deficits are ballooning, and they've been doing this for years. Something I have said is going to continue. You know that. I know it. Well, here's the news today. The U.S. trade deficit is expected to get worse. Well, I guess that plays right into our President Retard. I hate to use that word in its literal sense, but the man is retarded. Again, I'm sorry for those of you that are offended. And I know some of you are going to be offended. I'm going to get some bad feedback, but I don't really care. If you don't like it, you can go someplace else. I'm being honest here. Anyway, so our president here, the illustrious one, explaining that food shortages are going to be real. Lovely. Okay, imagine my shock. Imagine your shock here, people. Look, get ready. Be ready for anything. Always have the high ground. An energy crisis is already brewing. Let's talk about that. So crude oil Right now, WTI is around $109 a barrel. Brent crude came down. Why? Well, because you see, nations around the world, especially over in Europe, are still looking out for themselves. Oh, but they care so much about the Ukrainian people in the war. All they're doing is throwing money at it, okay? With regard to sanctions, you remember yesterday they couldn't agree. They could not agree on more sanctions against energy from Russia. And because of that, we've seen crude oil fall, but it's not going to last. It's not going to last here. And they're going to expand that war. Again, like I was just saying, so billions, hundreds of billions of dollars, and this is going to be in the trillions of dollars, is going to be thrown at that war over there and any other thing they want to come up with here as a mechanism to continue to pull cash out of the future. And what is that going to do? It's going to boost inflation as the value of fiat currency dissolves. Where's the cash coming from, people? You know what I'm going to tell you. We don't have it here in the United States. They don't have it over in Europe. No one has it. It comes directly from central banks who magically create it out of thin air. And every single fiat bill that is magically created out of thin air sucks value from every other existing bill. And you get what? Currency race to the bottom, like I've been explaining to you since like forever now, and higher inflation. It's so easy to understand this stuff. All right, let's look over at the market. Stock futures right now are higher. Actually, the setup for the market this morning is not bad. We got the 10-year yield stable, 2.36. We got a slightly weaker dollar, relative strength. I'm referring to the Dixie here. And henceforth, you got stock futures higher. All right, nothing major, but higher nonetheless. Crude oil, okay, like I said, WTI about 109, 110. All right, whatever. Even with a weaker dollar this morning, yeah, you guessed it. Gold and silver are under a little bit of pressure. Bitcoin is about 45,000 right now. People, for how long have I been telling you you need to have some of this in your portfolio? I don't care if you hate this stuff. You need some exposure. Okay, you need exposure to a bunch of things in this environment, and you know what they are. You need exposure to commodities. Okay, this is my opinion. You can have your own. You need exposure to oil and gas companies as well moving forward. It's very important. You need exposure to financials. You need exposure to banks here moving forward as well. All of this, again, is free for you right on my website, traderschoice.net. Just go look at Gregory Mannarino's top stock picks. You got long-term ones, you got short-term ones. I got a charting system there for you. All kinds of free downloads, a chat room for which I pay for you. I want you to utilize these resources, people. I am working as hard as I can to make this easy for all of us, all right? I promise you, you won't lose. If we just stick to our plan, we realize what the bigger picture is, and it's very simple. Central banks are going to inflate beyond your wildest dreams faster. Global debts and deficits, just like we found out this morning, are going to continue to balloon as well. Where do you want to be? What do you want to do in this environment? You got to be in the right spots. You know what they are. Betting against the debt, becoming your own central bank, my theme since day one, holding hard assets. You need exposure to certain things in this market. You know what they are. I just covered it for you. Look for opportunities in this market because they're there. We're not going to get fleeced. You know that. I'm not going to allow it on my watch, period, the end. We got each other's backs, and that's the way we're going to play moving forward, period, the end. That's how we operate. All right, people, look, that's it. So right now it looks like a gain for the market right at the open. And you know why. We got a stable 10-year yield. The debt market continues to be fueled by the promise of more cash being thrown at everything. That's what this whole entire war is really about. Everyone's trying to guess, what's this war really about? Vladimir Poo-Poo over there playing right into the game. He's a puppet like the rest of them to the central banks. Nothing can possibly make a central bank happier than another reason, especially a war, to throw hundreds of billions, if not trillions of dollars in cash at arms deals going on all over the place right under our noses. They don't want you to know about that. Weaponry, arsenals of nations right now are being built up faster than they have in decades. And this is going to continue moving forward. And where does that cash come from? We don't have it. Comes straight from the central banks. Welcome to reality. All right, people, look, that's it. Covered a lot of stuff here in this video. I always want to hear from you. Please comment here. I do read the comments, I promise. That's it. So let's keep an eye on these things. And, well, I'll see all of you later. I'm looking forward to it. I'm out of here.